We are currently in a stock market crash, bear market, whatever you want to call it. The S&P 500 is down more than 20%, the Nasdaq is down more than 30%, some cryptocurrencies are down more than 50%, with Ethereum down 69%. This is one of the best buying opportunities in years for some assets, for some cryptos, for some stocks, for some index funds. So in this video, as we're in the middle of this crash, bear market, whatever you want to call it, we're going to be going through exactly what you should be doing. So the stock market and the crypto market has been absolutely tanking so far in 2022, with a lot of individual stocks, individual cryptos, and broad market funds and indexes down year to date. Quite substantial amounts, double digits in pretty much every case, with some assets down more than 50%. This has mainly been driven by inflation fears, as inflation's been rising and then interest rates have been rising to counteract this, as well as other things like supply chain issues, the Ukraine war, the COVID still going on a little bit in some places, all the usual things you've probably heard on every other YouTube video and news channel. But importantly, what should we actually do to benefit and hopefully profit from the crashes and the low asset prices we're seeing at the moment? I'm surely going to be coming on to the 3 things that we should be doing right now, but before that, I'm going to tell you exactly what not to do. Number 1, do not panic sell. By panic selling, you're locking in any losses. Of course, if you're trying to trade or swing trade, that's up to you. I don't do that personally. If you're long-term investing and you're gonna be holding these assets, these investments for years and decades, do not panic sell. That's gonna lock in that loss. The loss is only on paper. It's actually much better now, as we're gonna see, to actually carry on buying, lower your average cost, so they make more gains in the future. But whatever you do, don't get sucked into those media headlines and the scary sort of thoughts. Just do not sell, do not panic sell. That's one of the worst things you can do. Number 2, and this is a tip I advocate quite frequently, do not check your investment accounts often. When investments are going really, really well or really, really bad, it can be tempting to almost check them daily or hourly. Check them as infrequently as possible. That'll just help you out a lot more mentally, rather than seeing your investments doing really well or really bad from day to day. Number 3, and I sort of touched on this in the first point on panic selling, do not listen to the media scaremongering. The media are either everything's amazing or everything's terrible, euphoria or absolute depression. You almost just want to ignore the media, ignore those front page clickbait headlines, and that then sort of ties in with not checking your accounts often, not panic selling, but do not check media headlines, do not listen to them. Although it can be good to soak in news, if the news is actually important, you will hear about it from someone else. So the more you can avoid media headlines and clickbait, especially when the market is falling, the better. And number 4, maybe most importantly, the worst thing to do is stop investing. As we already said, prices have come down massively. You can now buy Bitcoin at pretty much 50% of the value, but compared to this time earlier on in the year. You can invest into the S&P 500 at a nearly 25% discount. You can invest into the global stock market, which is what I do personally with my approach, at a 15 to 20% discount. These are cheaper prices than we've seen, and by stopping investing, you're not actually going to take advantage of the lower prices. So the best thing to do, and I advocate this massively, is to automate your investments, whether it is the stock market or it is crypto, because automation means you're going to carry on investing no matter what the price is. But if you don't automate it, now is not the time to stop investing. If anything, it's probably better to try and invest a little bit more and find a little bit more in your budget to invest, because prices are cheaper. You can bring your cost basis down, the average cost of your investment portfolio, and then hopefully over the long term, if you believe in what you're investing into, that'll then give you more long-term compound interest and more long-term gains. Now then, and the most important part of the video, let's get into the 3 things that you should be doing now that we're in this crash, in this bear market, whatever you want to call it. Here's exactly what I'm doing and what you should be doing as well. Number 1 is to re-evaluate your portfolio. I personally track all my investments, whether it's index funds, individual stocks, crypto, using my own MMS investment tracker portfolio, which is available in the description. But now is a good time to actually revisit your portfolio, revisit your investments, see what you're actually investing into. A lot of people like to invest in the sexy or the hype asset or investment when things are going well, like crypto and growth stocks, but obviously they are the things getting most pummeled and most battered when the market then goes down. So reevaluate your investments, your portfolio, and make sure you're actually happy with it. And it's balanced enough to give you comfort and so you can actually sleep at night. The second thing which then links into this is to reevaluate your risk tolerance. Particularly people who maybe only started investing recently or over the last couple of years, you've only really seen gains in both the stock market and the crypto market. If you've now seen 50% of your Bitcoin wiped out or 30% of your stock market portfolio gone in a matter of months, it could be a wake-up call in terms of looking at your risk tolerance and realizing, okay, that didn't feel good, maybe I should have a bit more allocated to stocks and bonds rather than crypto. Or if you're only investing into stocks, maybe you should be like, okay, I want to have some more in bonds rather than stocks. Me personally, I'm going to continue to just invest into stocks and crypto regularly, primarily the stock market through global index funds, and also a bit in crypto through Bitcoin and Ethereum. I'm going to continue doing that and dollar cost averaging regularly because I believe in those investments. But whatever your approach is, now is a good time to actually reevaluate how you feel almost losing money, even though it is on paper. Evaluate your risk tolerance and then adjust your investment portfolio accordingly going forward. If you had 50% of your portfolio in Bitcoin and you've now seen a large amount of your portfolio wiped out because Bitcoin has crashed, maybe that wasn't a good idea, and if you're feeling uneasy, that wasn't a good idea, so it could be worth putting more money into the stock market or in bonds as opposed to more into crypto. Knowledge. Third and finally, and this is sort of what I've been alluding to the whole video and what I've mentioned already, not stop investing, but to carry on investing and if possible, invest even more. As prices come lower, you can decrease your average cost of an investment and hopefully get more compound interest and more gains over the long term. As I mentioned already, this is why I'm a huge fan of automation, and if you are automating your investments, I would say just stick with it. It's not gonna feel good, it's gonna feel almost illogical. You know, the market's going down, I invest this month. It goes down again, I invest this month. But the point is, no one can time the bottom of the market. So by investing regularly, you're gonna be buying all the way down, and then when the market eventually rebounds, because it always does, you'll then once again start buying at higher and higher prices, but your average cost basis will be somewhere in the middle, and you then will get more long-term gains because of it. A lot of people now may be like, okay, the market is gonna crash, I'm gonna stop investing. The next thing you know, at a random time, tomorrow, next month, next year, the market all of a sudden bounces back and they then once again start investing at the top of the market, whereas they could have been dollar cost averaging in the whole time all the way down. So I would just say personally, although I'm not a financial advisor, what I'm doing personally is just continue to invest regularly into what I said earlier on, and I will be doing that no matter what the price of the different assets are. So that's a bit about the crash, what not to do and what to do. The final thing I'm going to touch on now is how to actually maximize during a market downturn, which is a question I got on Instagram. If you're not following Instagram, it's Making Money Simple. Go and drop me a follow. Daily financial education over there. But as I've said multiple times already, the way to maximize is to not just carry on investing, but if possible, increase how much you're investing per month. If you was investing into, say, the S&P 500 6 months ago, and you liked it, you thought it was a good investment for the long term, well, it's now dropped 30% in value. So you can get 30% more for your money every single month by investing into it. If you went into the shop tomorrow, into Sainsbury's, and saw steak was 30% off, or a protein shake was 30% off, most people would probably get extra and freeze them or keep them in storage because it's a good deal. When it comes to the stock market and it's our money, people think a bit differently, but if you can get yourself in that mindset, things are at a discount. It doesn't feel good now, I'm losing money on paper, but over the long term, by buying cheaper, I'll get an average lower cost, but then more long-term gains. That is the way on how to maximize on these downturns. And that's exactly what I'm doing. I obviously share my investments and my portfolios on this YouTube channel, but I'm gonna carry on investing regularly, and any money I've left over at the end of the month, I'm also putting that in the stock market, specifically global index funds, to capitalize on the lower global index fund prices that we're seeing at the moment. But yeah, that wraps up this video on what to do during a crash. Hopefully that has helped. If there's any other tips that you have, feel free to leave them in the comments, either what to do or what not to do. And other than that, thank you for watching, and I'll see you in the next video.